Tesla stock is officially half price and at a 12-month low. And another Tesla bull has joined the chorus, penning an open letter to Tesla's board of directors, urging them to consider a $10+ billion share buyback. So, ladies and gentlemen, before we get any further in today's video, one, you should definitely join Patreon with the card in the corner or the link in the pinned comment. 176 exclusive videos and counting, plus an update to my Tesla stock price targets just posted, which also includes updates to my Tesla valuation model. So join Patreon with the card in the corner or the link in the pinned comment. And two, Tesla stock. We have to talk about Tesla stock. Officially half price. That's right, 50% off and achieving a record 52-week low. Yeah, that's right. Despite Tesla's near flawless execution over the past 12 months. Furtherance of their already unassailable lead. Embarrassment of the entire automotive industry. Despite everything, Tesla stock today closing at $204.99 per share, dipping as low as $204.16 during the day. The 52-week high now, more than double Tesla's current price. If we look at peak closing price of $409.97, today's closing price, Tesla stock is officially down exactly 50%. Year to date, down almost 50%. Over the last 1 year, down almost 30%. Down nearly 40% in the last 6 months. And over the last 1 month, down close to 35%. I want to be super clear. This does not make sense. Of course, the stock market rarely does make sense. This isn't surprising to me. It's to be expected. But I do want to emphasize, this really doesn't make sense. And I believe it's only a matter of time until the stock market figures this out. Now, of course, none of this is investment advice, just some idiot sharing his thoughts and opinions on what's going on and how farcical it actually is. But I'm not the only one currently scratching his head asking what the actual fuck. Gary Black, Tesla bull with a current $550 per share price target for Tesla stock over the next 6 to 12 months, posting this. An open letter to Tesla's board of directors. With Tesla stock selling at its lowest forward PE, 37 times on Wall Street's 2023 EPS estimates, which are dramatically under the actual mark, meaning this is even more absurd, since the plague, with $18.9 billion in cash and no debt, and an investment grade rating, now seems an ideal time for Tesla's board of directors to consider a $10+ billion share buyback, and I agree. Our firm, the Future Fund, was founded on the belief that investing in companies that can change the world will both benefit our clients and focus investors on sustainability. On that note, Tesla stock is the largest position in our firm, including our flagship Future Fund ETF, a New York Stock Exchange listed high conviction ETF. Just for context, Tesla is also the largest position in my own personal fund at a 100% allocation. We have enormous respect for Tesla products, both as owners and investors, Tesla's strategy, and Tesla's management team. Tesla stock is now valued at its lowest forward PE ratio since the plague, and with an investment-grade credit rating now in place, we believe an aggressive multi-year stock buyback of at least $10 billion should be strongly considered. Makes two of us. We would prefer that a new buyback come from excess cash and Tesla preserve its debt capacity. I, on the other hand, would prefer Tesla actually utilizes debt. Now, I understand a few people's panties immediately will twist. That's risky. Well, yes, it does add a certain level of additional risk, although I would argue that this can be mitigated fairly simply. Tesla has a pretty good understanding of how much cash they're going to bank every quarter well ahead of time, and Tesla also knows that they're already a money printing machine, and the amount of money they're printing will increase exponentially in coming quarters and years, to the point where in just a few years' time, Tesla will literally be printing over $10 billion in cash every single quarter. Meaning even if the entire amount, $10+ billion, was financed with debt, this would be next to nothing compared to Tesla's near-term future profits. Now, I acknowledge many investors are ultra risk averse. I mean, you could probably say I am as well. That's why I don't invest in anything other than Tesla. This is also why I've currently got zero margin. I've never used margin to invest in Tesla stock ever. But I do also have a brain and am capable of identifying opportunity. And Tesla stock at these levels, holy fuck, dude. I am unaware of a better risk-adjusted opportunity anywhere in the stock market. Of course, there's plenty out there, I just don't know about them. So to me, a share buyback is an absolute no-brainer. We could argue maybe Tesla should use cash versus debt. That's not really the main issue here. I don't really care, but I really do want to see Tesla take advantage of this bargain on their own stock. Now, a little bit of context here. I know some people have an intense aversion to debt, and I understand that. It's not usually logical, it's usually emotional, and I totally understand. Some people are driven by their emotions and fear. In my own case, I've utilized more than $2 million of debt to accumulate real estate. In Australian dollars in total, I put in $70,000. US dollars, that's about $50,000. In return, By utilizing this investment debt strategically and intelligently and cautiously, that $70,000 in the span of just over a decade has compounded into well in excess of $1 million. I mean, turning $70,000 into over $1 million in just over a decade, utilizing debt, that decision seems to have aged relatively well. There is a camp of people who, for whatever reason, usually indoctrination at home and or more likely having seen somebody, close family or friend get completely wiped out by using debt like an absolute fucking moron rather than intelligently, strategically and defensively, and now has the emotional scars of having seen someone so close to them go belly up. Therefore, all debt equals bad. But this is a discussion for another video. As I said, the point really isn't about whether or not Tesla utilizes debt or cash, just that I really do hope they take advantage of this buying opportunity. Our view is that Tesla is now operating from a position of outstanding financial strength. With $18.9 billion in cash and marketable securities, and virtually no debt per your most recent 10Q, and with our expectations of up to $20 billion in free cash flow after all capital expenditures in 2023, and this is a point worth talking about. As I said, Tesla is a money printing machine. Think about this. Next year, give or take $20+ billion in cash in the fucking bank over the next 12 months. What's Tesla going to do with it? If they do nothing, they'll end up with $40 billion of cash. This is why the idea of utilizing debt for the full $10+ billion isn't really an issue to me. In 6 months, the first 6 months of next year, give or take, should they want to, Tesla could literally eliminate every cent of that debt. Just like I too, were I to liquidate my entire real estate portfolio, could eliminate all the debt I originally took on, pay my capital gains taxes, and still have over $1 million net, free and clear. Why? Because I wasn't scared of debt. I used it strategically. Of course, you could just argue that I was lucky. I hear that a lot. We believe now is a unique opportunity to buy your stock at well below our estimate of $550 per share intrinsic value. At the October 13th closing price of $221.72, spoiler alert, it's now closed at about $204, even cheaper, and assuming 2030 non-GAAP earnings of $42 and a 30 times PE, we calculate an annualized internal rate of return of 24%, well above Tesla's after-tax return on cash or new debt. Even on our 2023 non-GAAP earnings of $8, buying back Tesla shares offers a 3.6% earnings yield, which is higher than Tesla's after-tax return on cash in the first year. Buybacks give management high flexibility to turn on and off opportunistically, aka buy the fucking dip when there is one. When short-term noise is depressing shares, as is happening now, completely agree. As I've mentioned a trillion times, none of what's been impacting Tesla's stock price over the last 12 months has anything to do with the company or their execution. It really is just noise, at least in my uninformed opinion. When the price rises, we would expect Tesla to buy back fewer shares. For example, Apple, Google, and Microsoft have employed this consistent buyback strategy for years. In the year ending June 30th, 2022, Apple, Google, and Microsoft bought back 3.8%, 3.3%, and 1.5% of their outstanding shares, respectively. Over the next 3 years, we estimate Tesla would generate $100 billion in free cash flow after all operating investments. Let that sink in, folks. My estimates are in the same vicinity here, so again, going back to the point about buying back shares, whether they use debt or not, or cash, who fucking cares? 3 years from now, an additional $100 billion, what are they going to do with it? Surely, using a mere 10% of the next 3 years of free cash flow, just 10% for share buybacks, isn't going to move the needle in terms of the company's finances, but will make a great difference versus holding that shit in cash and watching it erode due to inflation. A $10 billion buyback over 3 years, which would be 1% of float, 0.6% per year, would have almost no impact on financial flexibility. This is important and accurate. Again, I just have to point out, some people have this idea in their head, no, don't spend anything. But when you put it in perspective, as I said, it won't even move the needle in terms of Tesla's financials, and send a powerful signal that the board takes seriously its role of driving shareholder value. Many erroneously believe that buying back shares impedes a company's ability to grow. This view is nonsensical, it's true, since share buybacks only come after internal operating projects are funded. In other words, this is the money that's left over after they've spent all the money they could spend on stuff they need to spend money on. It's extra, it's leftover, it's surplus. One must view buybacks against other financing options: retiring debt, acquisitions, dividends, or building up cash. Accurate, and remember, Cash is trash. We would argue that none of these financing activities offer a return on investment anywhere near the return on buying Tesla's own stock. We believe that buybacks would be preferred to dividends by Tesla shareholders. Given buybacks still have favourable long-term capital gains tax treatment and can be managed opportunistically, unlike dividends, which are fairly rigid once put in place. We would be happy to meet with the Tesla board to provide more detail of our reasoning behind our Tesla buyback recommendation. And Gary ain't done yet. Another tweet. We asked a securities lawyer if Tesla could authorize and announce a $10 billion multi-year share buyback and then use $5 billion to immediately buy back shares from Elon Musk so he could buy Twitter. The answer appears to be yes if everything is disclosed. Maybe why S&P investment grade rating came early. Tesla would have to wait for earnings to avoid being accused of manipulation and use a negotiated price based on that day's close. Or they could announce 3Q earnings and any 4Q guidance and wait a day or two to set the price based on where Tesla's stock price settled out post earnings. This could explain why S&P moved early to upgrade Tesla stock to investment grade status and appeared to have so much forward-looking detail to allow Tesla to issue debt if they wanted to accelerate a portion of the share buyback to buy Elon's shares. And finally, Tesla. Wall Street 2023 EPS estimates continue to increase. They've increased 8% in the last 3 months and they're up 51% year to date. We'll talk more about this in a moment as Tesla's price falls. That has caused Tesla's forward PE to drop to 35 times, its lowest since the depths of the plague when the global economy was shut down. That makes no sense. You know what does make sense? Those 4 words right there. Read them again. That makes no sense. So, looking at this shot from the Bloomberg terminal, on the left here, Tesla stock price in white, 2023 EPS adjusted estimates in red. Generally speaking, there's a reasonable correlation between EPS estimates and Tesla stock price. E.g., red line goes up, Tesla stock goes up. Red line goes down, Tesla stock goes down. But there is a gigantic disconnect in the last better part of 6 months, where EPS estimates continue to surge. We just heard they're up about 50% in the last 12 months. Yet at the same time, Tesla stock has fallen off a fucking cliff. Does this make sense? And the answer, of course, per Gary and myself, is no. It doesn't make any fucking sense at all. But it has occurred. And if you can't read between the lines, too bad. The big question, Tesla, are you listening? Now, they obviously are listening. They're not idiots. They do see this discussion. They absolutely know a bunch of Tesla retail investors are pounding the table, buy back some stock. Now, I totally understand if Tesla wants to take an ultra ridiculously over-the-top defensive strategy. I understand that. But were it me, were I on the board of directors, I'd be pounding the table for buybacks, no question. This is the literal definition of a buying opportunity, in my uninformed opinion. Unfortunately, I've completely exhausted my own personal resources and can no longer continue to buy the dip. So, dear viewers, I'm considering quite strongly whether or not I should release some of my sex tapes on OnlyFans. Let me know in the comments below if you're interested. Am I joking? No comment. In all seriousness, I'd love to know what you guys and girls think. Should Tesla buy back shares? If so, should they use debt or cash or a combination? Or should they just play ultra defensive, scared little bitch, cry in the corner, super risk averse mode, and just continue to accumulate a literal mountain of cash, just in case World War III actually takes place? I honestly think that is the only possible reasonable excuse Tesla could have. Potential risk of nuclear war. In a situation like that, all bets really are off, and it's probably better that Tesla doesn't have any additional debt and has as much cash as they can possibly manage. But really, nearly 20 billion bucks, they're going to print $100 billion plus in the next 3 years. What's 10 billion bucks of share buybacks over that period of time? It's nothing. It's a speck. It's chicken feed. So Tesla, I know you're listening, and I hope you make the right decision. Oh, by the way, guys, in the time I recorded and edited this video, I've actually posted yet another exclusive video to Patreon. I'm not even kidding. We're now 177 exclusive videos, plus the recent update to my Tesla stock price targets and the valuation model. So what are you doing with your life? Join Patreon with the card in the corner or the link at the pinned comment, and I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all.